Can you guys hear me? Let me know if you cannot hear me. All right, guys, my apology because something is wrong with my webcam. Okay, I don't know why I still cannot connect to my webcam. Yeah, okay, all right, thank you so much. Okay, so shall we just wait for 1 to 2 minutes? I will start the session. So you can see on the screen today we'll talk about the Fibonacci retracement. Okay, it is your first time joining me because I never seen your name before. Welcome and thank you so much for joining my session. Wow. Okay, let me see. The zone to sell gold is oh, that's quick. It's moving almost 100 pip. Okay, first time for you. Okay, it is suitable. Okay guys, because today is the first time that I change the timing. Okay, because I think last time that would be, I think, in the evening. I mean my time zone was 5:30 p.m. GMT +8. Okay, so for the UTC that would be what time is that? Let me check. Okay, for the UTC that would be, let's see, make it, it is 9 a.m. in the morning. Hang on. Okay, last time the webinars, okay, for the live streaming, it was 9 a.m. GMT in the morning, but now I changed to this timing. It does okay with you guys? Please let me know. Okay, because from this month onward, the webinar is gonna be at this timing. Okay, so shall we just begin our session, guys? Thank you so much for joining me, and welcome Change Mada. It is your name. Welcome. Okay, because today is your first time joining my webinar. Please let me know if you have any question. All right, and as you can see on the screen, today we will talk about Fibonacci retracement. I believe every one of you guys heard about Fibonacci retracement, but it is very important that where and how you're gonna pick the swing. Okay, like swing high, swing low, I'm gonna share with you guys because I heavily using Fibonacci for my setup. Okay, and before guys we start the webinar, disclaimer first. You see here they will say that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation. And over here they will say that past performance is not guarantee of or prediction of future performance. This analysis contained herein does not constitute a personal recommendation and does not consider your personal investment objective, investment strategy, financial situation, or needs. IC Market makes no representation and assumes no liability as to accuracy or completeness of the information provided, nor any loss arising from any investment based on recommendation, forecasts, or other information supplied by IC Market. And risk warning: trading forex and CFD carries significant risk and it may not suitable for all investors. Okay, and about myself, speaker today, my name is Peggy. I'm an investment analyst and a prop trader. Okay, so I've been trading more than 5 years now, and I have been doing the webinar for the IC Market. It's close to 3 years now. I think in March 2026 it's gonna be my 3 years. Okay, and this is the agenda for today. So basically we're going to find or how to pick correct swing high, swing low, how we're gonna use Fibonacci like retracement zone, and how we're gonna use a Confluence in trading and live example. So we're gonna practice in the live chart together, so you can get a bigger picture like how you're gonna apply in the real life. Okay, and nice to meet you too. How I'm gonna call your name? I call you Mada. Is it Mada? Mada, please let me know. Okay, and nice to meet you. So the thing is that they say that the first mistake, which is you pick the wrong swing. Oh, Julio, is that nice to see you? Where are you tuning in from? Which country? I'm based in Singapore. Okay. Why this is just okay? So they will say that the most trader grab the nearest high and low instead of the most significant swing. Okay, wow, that's so far another side of continents. Madagascar. What time is that over there? So my time zone is now at 1:08, so it's about like 1 p.m. in the afternoon. Okay, so the swing, you'll see that using minor pivot. So basically you picking tiny intraday high low that doesn't represent the real market structures. Okay, it's the 8 a.m. Okay, ignoring time frame, so drawing Fibo on the M minute charts when you are trading on H4 setup. Cherry picking swing, choosing swing that look good later than the most obvious one. So basically I'm gonna bring you to the chart. Okay, and here, so this, okay, I'm gonna change because I'm using for my here, right? So whenever, let me just pick for another one, which is this one. For the Fibonacci, okay, you need to look at the chart. You find those like really obvious that you can see the like swing, right? If gonna look like this, is it really obviously that this gonna be my swing high, this gonna be my swing low, right? But some of you guys, this is H4 time frame. Okay, right? Some of you guys might pick this swing. You say this swing, you might pick this swing, or you might pick this low. No, you need to pick the obvious that, you know, whenever you look at the chart, you will see that, okay, there's a high, there's a low, there's swing high, there's swing low, right? So this is gonna be Fibonacci retracement. Fibonacci retracement 23.6, 38.2, 50%, 61.8, and 78.6%. This number is Fibonacci retracement. So you see that, and whenever you see like that, right, we're gonna see that, okay, this is Fibonacci level, they are acting at a support level. In this case, if you draw Fibonacci, you need to draw Fibonacci from where the swing low, which is starting point, is always 100%. You pick from the swing low here to the swing high. When you draw Fibonacci from your swing low to the swing high, all Fibonacci level is acting at your support level. You see this, your support level. In this case, right, you see that price had bounced from 61.8% Fibonacci level here. So this is the support level. Okay, but whenever you draw the Fibonacci from the starting point, which is swing high, and the left to the right from the swing low, all Fibonacci level here is acting at your resistance. Okay, you see that this is retrace, a pullback. Where's my brush here? You see that 50%, right? From this, oh no, sorry, from this swing, they retrace here. 78.6%. Okay, but remember that whenever the price has go beyond those Fibonacci level, meaning that it invalid. Okay, it invalid. If price had from here rising, close above, close above, close above, close above, all this level invalid, so you cannot use the level anymore. Okay, so in this case, price had retraced at 78.6%, and then you see the rejection. Okay, from this swing, you can see that retracement, and this acting the resistance from here and then continue to go upward. Okay. And okay, how to pick the right swing? I already said that you use the most obvious swing. Okay, if a fresh trader look at the chart, which high and low would they pick in the first? So you choose a significant one. Okay, just pick significant one. Match the trading time frame. So you should draw Fibonacci on a higher time frame if you're the news trader. But if you have the experienced one, you can draw on the M15 or even like M5. Okay, but for you to pick the correct swing, you should draw at H4 time frame. Okay, measure for the last impulse. Okay, use the most swing strong move for the impulse, which is those like really strong move like that. Move, this is called impulsive move, right? Okay. Fibo on the style, all swing produce unreliable level. So use the recent swing high and the swing low on the impulsive move. Okay. Oh, and here, high probability retracement zone. We know that Fibonacci we have 0. Always is the ending point 0. Starting point is always 100%. Okay, we have 23.6, 38.2, 50%, and 61.8 and 78.6%. Okay, so for the quick pullback, okay, the shallow retracement often seen in the strong trend market, good for momentum entry but lower conviction alone. Meaning that, let's say we're gonna use this in gold, because like recently we know that gold had really strong uptrend, and I see that gold has pulled back or retraced 38.2% because they have really strong trading market right now. Okay, for the golden zone, okay, golden zone is the single most reliable fifth entry level, where price most often reverses after significant move, high conviction. 78.6% is going to be large retracement, which is the deep retracement, aggressive entry near the base. Work best for confirmation by Confluence, highest reward and risk potential. So guys, if you want to master Elliott wave, if you want to master harmonic pattern, you need to know how to pick the correct swing high, swing low, and you need to master Fibonacci retracement. Okay, because Fibonacci using heavily on Elliott wave, harmonic pattern. Okay, and you can use Fibo for like confirm the entry as well. Here, let me see here. Okay, and this is the setting. Okay, whenever you do the setting, this is Fibonacci retracement. You want to pick the color, is up to you. You want to include the price, you tick. If you don't want, you untick. Okay, if you want just the level, it's gonna show you like that. You want the percentage, you just pick. So the setting is up to you. You just change according to your reference. So up to you. I just put the percentage, or you can put the value. Okay, up to you. Percentage, right here, right? Okay, go to the H4 time frame. Okay, I'm go to the H4 time frame right now. Okay, now I'm gonna randomly pick somewhere. Let's just say somewhere around here. Okay, just somewhere around here. Okay, in this, right, I'm gonna draw my retracement. This one is my Fibonacci retracement. So not retracement, like key level. Let's say this is gonna be my first resistance level. Okay, and this, right? Based on this, where is our swing? Where you gonna pick, guys? Okay, don't worry if you get wrong. Are you gonna pick 1, 2, or 3? Which one is your starting point, which is starting with 100%? Which number is your starting point? 1, 2, or 3? Okay, I'm gonna tell you that this is gonna be my swing, right? This is gonna be my swing. But where is our starting point, guys? Where is our starting point? In this case, 1, 2, or 3? 1, 2, or 3 based on this H4 time frame. One. Okay. Somebody say 1. Don't worry if your answer wrong, because this is for you to practice. If you don't understand, you can ask me. Okay, because if at the end of the webinar, if you still unsure, you don't understand, next webinar you can just ask me again, because for the IC market they are giving the 2 webinar per week. Okay, I think every Monday is about live trading that's gonna cover by my colleague. Her name is Crescenda, and every Tuesday it's gonna be me. I'm gonna share with you guys those like technical out there. Okay, 1, 2, 3. Okay, I'm gonna show you with you guys. So based in H4 time frame here, I'm gonna pick, just now it is 1, 2, 3, right? I'm gonna pick number 2. Number 3 is too far. Why? Because you see the price had already go pull back, continue, small pullback, and then continue, right? So I'm gonna pick number 2. The reasons, 1, and one thing that you need to take notes, right? Whenever we draw Fibonacci from the swing low to the swing high, you see that there's the trend line here, right? The trend line should somehow not cutting too much of the candle, but like the trend line here, you can pick here. That is okay. You can pick here, that is okay. To me, price has already from this swing low and make the swing high here, and then price has already pulled back. Okay, if I'm gonna move, let's just say, right, if gonna just move like from, let's just say you look from this one, you can pick here, right? Whenever like price have make the low, the high, price have pull back here somewhere at not even like 38.6%. you see that small pullback, and then price have pull back and continue make a new high, right? Broke a new high. This is the low. So what we need to do then, this is not my high anymore. This is not my recent high. Of course my recent high here, and then where is my recent low? It's here. So from here you will see that, okay, I'm gonna remove, right? From this swing high to this swing low, or the recent low, you see that 30.2% is gonna be the level that we're gonna monitor, because if there's a small pullback, 30.2% meaning that there's strong trending market, right? So here, okay, so 1, we're gonna monitor here, because you can see that price has somehow rejection from this level, so meaning that there might be something around here, or the key level. Let's just monitor. Okay, price close below, so whenever price close below 30.2% is invalid. Okay, and then we need to shift here a bit, meaning that if you were to look to the left, this is gonna be your pullback support level plus 50% Fibonacci, right? You see that whenever price have go here, you see that bounce here. So if you don't look, if you always refer to the Fibonacci level, then you said, okay, Peggy said Fibonacci in this case they are acting at the support level, meaning that if price retrace or bounce from 30.6 or come here, I'm gonna buy here. No. Okay, you need to look to your left, look for the key level. There's nothing here, but you look further away here, you see that this one is due to be the resistance level, right? Resistance level, and you see that price had closed above with this impulsive move. This candle push the price broke above this resistance level, right? This used to be your significant resistance level. You see the rejection, and price go all the way below and then come back again, and this is impulsive move, imbalance. You see that close, push the price break above the resistance, and this is gonna be your what, pullback support. So whenever price broke above, you can see the swing high, price have pulled back here, then you draw. The first thing you need to, if you attend my support and resistance webinar, you will know that you need to find the key level, which is support and resistance first. Second, then you draw Fibonacci. Okay, you see that price have broken, right? Pull back, retrace. You see that 50%. So this is a bounce up. So it's done, right? So you buy at this zone. Plus what? Pull back. When it pull back, price come and test here, it become your overlap support level. Okay. Now, what about the resistance? Okay, gonna move here. Okay, the resistance level. So for the resistance level, we will draw from the okay, now this is my swing high, this is my swing low. You're gonna draw from this swing high to this swing low, right? So now all Fibonacci is acting at the resistance level. Okay, 50% is right here, 61.8, and always you might have to like set your your rules that if you want to sell, you want to sell at the premium, which is when price getting expensive, right? So meaning that above 50% to 78.6, and then you're gonna sell, right? But if you're gonna buy, when price at the discounted zone. Okay, so now 50% you to the left, price had rejected from this swing. Okay, this I'm drawing in H4 time frame. Let's just see, right? Dun -dun. Okay, you see that is retrace by 61.8%. This is your resistance level. Okay, now why? Let's say, okay, Peggy, I'm drawing H1. Can I draw Fibonacci in H1? Yes, you can draw in H1. I'm gonna move back here. Okay, I'm gonna pay somewhere around here. Okay, it is very obviously that you're gonna look in H1. We see that, okay, our recent one, where we're gonna look for the recent one, it's here. This is a recent high. So basically, this is gonna be our trading range. Okay, meaning that if price pull back, because you see that if you look at market structure, price still make the what? Now you must know how to look at structure. Price still make the higher high, higher low, higher high, right? You see that break of structure, and then you pick. Hello to you, AP. It is your first time joining the webinars. Welcome. Let me know if you have any questions. So I pick the swing low to the swing high. Okay, in this case, which the significant that I might want to buy, I might look somewhere around here at 61.8, because there's the demand zone here. 50%, I'm kind of okay. I'm gonna monitor whether price gonna from here bounce up, or they're gonna close below. Boom. Okay, you see that? Right, we pick at the golden zone, and price has, even though slightly, go to 78.6, somewhere around here. So basically, if you want to put this, gonna be your buy zone from 61 to 58.6. You can do that as well. Okay, we take the last structure, find sell on the premium and buy on the discount. Yes. Okay, you see that? Or you can use, or you can just actually, I think I have the the center one. I think you can use this box. You want to do the premium and discount. What is my 50%? No, not the vertical. Where my level is not showing. Oh, because it's Yeah, you can use this one, right? I mean, this one is for you to use like others, like if you trade with those like ICT, SMC, you can use those kind of box here. You can just use like that, meaning if price go above here, you sell. If price go below here, you buy. But Fibonacci, to me, using Fibonacci, I already know that. Okay, so price has go to here, so you buy. Because why we buy? Because price still make a break of structure. Okay, still make higher high. Structure is really clear that it's on uptrend. Okay. Okay, I'll continue. Okay, so why Confluence matter? So that's why you need to use Fibonacci with other like indicator or other like support resistance or those like key level. A fib level alone is just a suggestion. Confluence turn it into a high conviction trade. So you can combine with support resistance. Fib level align with the key horizontal support resistance from a higher time frame. Recommended H4. Oh, my handwriting is, I recommend H4, okay, or H1. But if you have the experience, you can even draw an M15 or M15, okay. And also you can use with, what's that, trend line. Fibonacci retracement touches a rising or falling trend line at the same price, okay. Order block. What is order block look like? Order block is just the bearish or bullish engulfing candle. Okay, a bearish or bullish order block sits at or near the fib level with retracement level. Moving average, a key EMA or MA 50, 100 or 200 close to the Fibonacci zone at every time. Okay, how it look like? Come, we're gonna look here and find the Confluence. Can we look at gold? Okay, wow, gold has already falling so strong. Oh, it's rising. Gold has rising. Okay, now this in M1. Okay, is this that's the news? Why suddenly gold move a lot? Oh, because I'm looking in M1. You see that in M1 time frame. Oh, in this candle that move that quick. Okay, H4. This is our H4, right? In H4 timing, it is very obviously that we see the swing high and the swing low or high and the low here, right? You can use the magnet so you can just get a picture. Yeah. So right now, just now price has this morning somehow it almost hit the 38.2%, okay, and then kind of pull back. So now, where is the resistance? I would pick this one as my first resistance first. Today, this is gonna be my first resistance level. Why go into volatile in the lower time frame? So this is gonna be my first resistance. Still, okay, my first resistance at like 38, 48.65 to 48.80. Basically, this is gonna be my somehow the zone. Let's pick the correct one. We zoom and see. Wow, I don't know why suddenly go to volatile in the lower time frame. And you see that in M1 1 minute candle 150 pip, just one candle. Okay, that's why if you knew you want to trade gold, okay, you shouldn't enter to the market right now. Okay, you see that, and the next resistance I'm gonna pick is here. This is gonna be my second resistance plus 50 to this zone. Okay, so basically if price come here, I see the rejection, I'm gonna sell, right? This is Fibonacci, so they are acting the resistance level. And before that, Okay, if you're going to go to the D1 time frame, right? On the D1 time frame, this is going to be the recent low, this is going to be the recent high. Nothing close below. You see that close below 61.8% this level. So whenever you draw like that, there's no Fibonacci at your key level, that is okay. You don't force, you don't move your key level based on the Fibonacci level. No, you don't have, then you don't need to draw. Okay, let me pick here, and then I'm gonna put the very obvious low is here. This is the high. You see that go all the way 78.6% somewhere, so don't have, then you don't use. So right now, okay, for the here we draw in H4 our first resistance level. Before that, we're gonna move back here to here. Okay, I'm gonna trade in the H1. Okay, I'm gonna see that this is gonna be my swing low, this is gonna be my the recent swing high. So basically I'm gonna buy gold. So which zone? This is gonna be the 38.2, 50% and 61.8. So basically I'm gonna wait for price to kind of pull back here. Can we add in those like Fibonacci EMA? Okay, H1, I'm gonna go to the M15 for my entry. I want to see which one I can look. Okay, here 38.2 that I'm watching. Okay, 50%, they come to 50%. Come did the OB here, right? You see that if you're gonna buy at the 50 and the below, you're gonna buy here. From here, we know that price has already fly high, right? Boom. And right now it's almost hit the first resistance, and now it pull back. Now it's right here. Okay, now it's right here, right? It's right here. So this is acting at the support level 50% from this swing high to this swing low. Okay, any question, guys? Oh, let me see. Good afternoon to you. Can we what? Okay, I know the other concept, but I don't know well how to use correctly trend line. Which concept you can share with me? The trend line, significant trend line, you might have how many touches? At least three touches. That's gonna be significant trend line. Why? Because if you always draw the trend line based on 2 touches, for example, these 2 you draw already, these 2 you draw the trend line, it's here 1 2. After that you draw another trend line, you draw another here. How many trend line you have? 2 already. So which trend line, if price come, you're gonna use here or you're gonna use here, right? Might have how many touches? 3. Then you draw that is gonna be your trend line. So in example, this is a H1. I'm gonna draw my trend line. Can I draw here? This how many touches? 2. I don't draw, but structure I see that is in the bullish. Okay, here trend line, let's say we draw the trend line. This is our trend line. 1 2 3, more than 3, and price on uptrend. This is our trend line, right? This is our trend line. Down here, price close below, broke your trend line. This is your bullish trend line or your uptrend. Our trend line close below, you see that pull back. When it broke below, pull back, you sell, right? You sell here. You see that? Okay, you see this is significant. Close, broke below, pull back. I'm using the IC market data feed. Okay, so some of the, if different brokers, they might have they have a different closing and opening candle. So you just test it out which one you feel comfortable, then you just pick one broker and then you look at the candle. Okay, you will see that when it broke, you can change the color, it's become bearish, so you're gonna look for the sell entry. What if I go to M15? Can I? You might say, hey Peggy, can I just look at the M15? Yes, it's very obviously that in the M15 price is on from here, they are on a bearish move, right? Because they are still making the lower high, lower high. This is a trend line. Okay, this is a trend line. Can trend line just fine tune, but no, I don't use the trend line. But I will see that price have closed below break of structure, and the M15 even draw a trend line. This is gonna be something like this, right? Fine tune a bit. Okay, so you see that it broke out of the trend line. This one broke out, might need to pull back here and continue rising. So basically, the trend line is just for you to look for the structure, you know, for your entry. But sometimes over here, okay, let's say it break out the trend line, okay, from the bearish, now it broke above, become your bullish, right? I'm gonna pick somewhere here. Okay, I'm gonna pick somewhere here. So how can we draw? Can I draw Fibonacci right now, guys? Can I draw Fibonacci right now? I pick here and I pick here. Am I correct? This is the high, this is the low. Can I use Fibonacci right now to draw? Because I wait for price kind of to pull back. So I want to see where any level here have any Fibonacci line up together. Can I pick? Can I pick here? Can I pick this side and then I pick this low? Can I? Yes, can I pick? Somebody say yes. I think no. Okay, yes. Yes, no. I think it's no. Why? Because the high haven't formed yet. No, it's not too low time frame. It's not too low time frame. Now I'm talking about you can draw Fibonacci at M15. It's not about too low time frame. Any time frame, M1, M15, M5, any time frame you can draw by using Fibonacci. It's just that whenever you draw Fibonacci in the low time frame, there's a lot of noise. Okay, so if you're still new trader, you should draw H1, H4 above. But if you have the experience, any time frame you can draw. The important is that you need to know how to pick the recent high and the recent low. In this case, I cannot pick this high yet because the high is still forming. Price might continue going to rising, so you cannot. You need to wait for price has show you that it's going to be the recent high. You go back. Okay, now. Oh, it's go already. So basically, you can see here, whenever you see something like that, this is your swing low and this is your swing high, right? Price retrace only 23.6%. Somewhere close to your confluence with trend line. So you might buy from here. So whenever price starting to make a new high, you cannot pick this high anymore. You need to remove, and then you need to wait for the price to form the new high first. Why? Because if you keep picking here, oh no, you draw from the swing to the swing high here. Well, the price still rising, then you have to keep drawing. No, you need to wait for price to form the high, not keep adjusting Fibonacci. Okay, no. Okay, clear? You see that now it's forming the swing low and the recent high, close below 23.6%. So my zone that I want to buy 50 and below, somewhere around this, right? If I want to buy somewhere around this. Okay, come to the zone, boom boom boom, right? You see that, and continue to make the break of structure that 50%. So whenever price 30.2%, if you want to buy, you want to buy, sometimes it might bounce a little bit. So sometimes you might have to, you know, set your rules that if I want to buy, price have to retrace at least 50%, like, you know, then I'm gonna buy. Okay, but sometimes price may not come to 50%. Sometimes it may come to like 38.2 and then continue to go higher. So sometimes you may have to just make up your mind where you want to buy or where you want to sell. Okay, but sometimes if you miss the entry, you don't get mad, you know, at the market or at yourself, because you miss the entry, you did not earn, but you also did not lose, right? You don't lose anything. You just wait for the setup. Okay, continue. Boom. Okay, Confluence score, how many is enough? Weak signal, fib-only level, only proceed with cautious, wait for confirmation. Meaning that wait for confirmation, meaning that kind of pattern, those like you see, those are like a lot of rejection, price action. Okay, whenever price come, and then you might, okay, trade. Moderate, Fibo plus 1 convenient factor, tradable with a tight stop and clear invalidation. High conviction, Fib plus 2 or more factors, those are the setup you sign up on. So meaning that you use Fibonacci plus 1 could be your the level, key level, and plus 1 more you can use indicators such as RSI or stochastic. Like if price pull back, okay, you pull out the RSI, okay, the RSI here, like we're gonna buy at this zone, correct? So I know that in this zone, what I want to buy here, one is my support level in the lower time frame, I know, and I see that I have like more than 2 I have the demand here, I have the key level plus my demand zone, and then price Fibonacci 50%. I have 3 confirmation of 3 confluence, and the RSI have somehow close to 50%, somewhere around here, and then I'm buy. Okay, okay, this is example 61.8 setup, hit daily support and resistance same level, bullish and graph candle form, previous structure respected, as I show overbought or divergent. Okay, this is just an example. Okay, this not okay. Your pre-entry checklist. First, identify the trend on your trading time frame. On a high time frame contact, look on daily time frame. Like D1 yesterday closing, what candle closing with? It is price closing close to those like support resistance or not. But yesterday price closing with bearish candles. Today we're gonna sell, but whenever we're gonna sell, we're gonna sell on the higher, not sell on the lower, right? Find the most recent swing, significant impulse, swing high, swing low. Draw Fibonacci from the correct swing point. Starting point always 100%, ending point is always 0. Okay, identify 38.2, 67.8 or 78.6% for the entry zone. If price retrace at 38.2%, meaning that is very strong uptrend. Okay, confirm at least 1 convenient factors at your entry zone. Wait for any confirmation such as candlestick pattern, break out, and retest. Okay, so key reminders: never trade Fibonacci level without any confirmation. At the minimum, confirm with a candle pattern. Okay, stop loss might be placed below 78.6% for the buy or long, or above 78.6% for the short entry to invalidate the setup. Okay, but sometimes I might put at the, you know, the recent swing high or recent swing low. Okay, 61.8 is your bread and butter entry. Master it before chasing deep retracement. Side down on 78.6% entry, they carry more risk but also higher reward. So basically if I want to entry at 78.6, meaning I see the price have broken 61.8%, or I buy at 61.8% and then price is falling and broke below, my second entry is going to be at 78.6% and my stop loss is going to be at the swing low, for example. I'm going to see whether any like they have like a very deep retracement. Okay, maybe I move back here. Don't look at the time frame. I'm just gonna show you the example only. Okay, so for this trading, I know that's gonna, I see that okay, this gonna be the low, this gonna be the high. Okay, $30.2, 61.8, 23.6%. Be done, right? Color. Okay, here if you cannot see, you can change price to the left or to the right or to the center. What is to the center? Okay, center here, so you can see not so far, right? Here from this swing, which is starting point, ending point is 0. Let's say in M15, I know this is the OB, right? This is my OB. So basically, this is gonna be my buy zone from this swing to this swing, meaning that from this, okay, price pull somewhere here, I'm gonna buy up. Okay. Boom. Okay, let's say because price is already go, right? So let's say I don't wait for confirmation, so I buy here 50%. Okay, and after that 50% you haven't buy because you don't see, you buy, you put a pending order at 61.8, and then see my price closing M15, right? The last buy 78.6%, and then my stop loss I put below this swing low, this swing. Okay, this swing. Why I buy here? Why I buy here? Why? Do you confident to buy here? You see why Peggy buy? You see that the price you make the low high. Why you buy? You look at the structure. This is just structure is here. Price has already broken this. This price has already broken, guys. Chain of character here already. Okay. This your chain of character is here. So this just external. So basically we already buy this when price pull back here, right? This is, you see that price retrace here. I cannot see here. I'm gonna change to the left. Okay, you see that right here. Okay, from this swing low to this swing high, price have pulled back 50%. This is chain of character, so we wait for price to pull back, then you're gonna buy. You're gonna target here for this TP, the swing, the recent high, right? But for the M15, the lower one, okay, for here you buy the last entry, you're gonna buy is here. But if price broke below this, gonna hit our stop loss. Always put a stop loss, right? Okay, continue, and boom, hit your take profit, right? Why? Structure has changed. Don't forget, chain of character, small pullback, make the higher high, pull back to 50%, and then continue to go higher. Okay, is that clear? Any question? Any question? Okay, that's gonna be end for the webinar today, guys. Thank you so much for joining me. Any question before I end the webinar, guys? We still have about 9 to 10 minutes. Any question? No question? Okay, I'm gonna do the, let me find the key level for you guys for today. So basically I'm gonna draw at the body, and then I'm gonna highlight it at the zones. Okay, plus, no, I draw second resistance first. This I'm drawing H4 time frame, pick 50% and no 30.2 and 50%. I'll change the color to white. Okay, then you can draw the zones. I'm gonna pick like somewhere around. So basically today we're gonna look for the sell entry. Okay, okay, it's gonna be the zones. The upper one at the wick would be 4 egg, or I'm gonna put at, okay, somewhere around this, right? The support level is here. You're gonna draw here, price close the gap. After close the gap, the body is close above first support level. But I might somehow, this is my first and this is my second. Okay, okay, so this is my level. If you want to add 50% just to monitor somewhere around here, so let's say if price break above this, another zone, your my monitor would be somewhere at 5,000. I'm gonna put here as my second resistance. This one I'm gonna monitor first, because 5,000 that's gonna be the key level, right? And we have 50% Fibonacci retracement here. So this is gonna be the resistance level. If price close above, meaning that if price close above, the body close above the 5,000, that's gonna be the key level. The next level gonna be 61.8 with this rejection, and pullback and sell right here. Okay, that's gonna be the key level today. Okay guys, that should be all for today. I'm gonna catch up with you guys again in the next webinar, guys. Thank you so much for joining me. Okay, and nice to see you here as well. All right guys, bye for now guys, take care, good luck, bye bye. You're welcome. I'm gonna get my webcam fixed. Maybe next webinar you're gonna see my face. Alright guys, bye bye, take care, bye.